Hello, everyone, and welcome to the weekly roundup. Today, we'll be covering the PBOC rate cut, ECB rate uncertainty, and the commodities market. Hello, Ben.
Hey Eva, happy Friday.
Yeah, always happy. Okay, let's kick things off with China. They have been at the center of global news this week with aggressive stimulus efforts. Um, let's unpack this. What recent policies did the Chinese government put in place, and what has been market reaction so far?
Yeah, great. Thanks. Yeah, the market reacted aggressively, certainly. If we scroll back to what we looked at a week ago, market was kind of thinking that China was a little bit behind in their action on what to do, and they came out, I'd say, pretty aggressively this week. So they did a 50 basis point, we'll say, overnight rate cut. And the market reacted to that quite aggressively, both from a bond perspective, but also from a stock perspective. So the 10-year Chinese bond hit an all-time low, something just under 2%. And you had the stock market take off. So we'll show you a chart and see how aggressively that was. But some of the, like KWEB, the ETF, which we own, was up 25%, I think, this week. And some of those names that have been just struggling, like Alibaba and JD, and those Chinese names that were super, super cheap for a long time, changed quite aggressively. The other thing they did on top of that rate cut is they reduced the amount of down payment for second homes. They also cut bank borrowing costs. A lot of less banks had to put up less collateral with central bank as well. So, the Chinese real estate market is a big percentage of your net worth in China. And so as a result of that, a lot of the action was focused on trying to shore up the real estate market, where a lot of people in North America and in Europe would have big assets invested in stocks and bonds. In China, it's a small percentage of the population, so they're really focused on the real estate market, and global equity markets liked it significantly. There's the hedge fund manager, David Tepper. I don't know if you saw him out this week, but he spoke on Wednesday, I believe, and they asked him what he was buying, and he said everything.
Interesting.
Yes, yes,
Let's go right in.
exactly.
Okay. Let's
Yeah.
shift a bit to the Eurozone. ECB rate cut outlook seems a bit unclear. What's happening there?
Yeah, so it did flip from almost certain that they would cut rates in their upcoming meeting, and it went back to a bit of a coin toss on Monday. And it'll be interesting to see what the data looks like on Monday to see where they flip back to. But the inflation, I think, maybe picked up a little bit more than they'd like, and so you've seen the market kind of flip-flop back and forth. And I would likely think with China cutting like they did and the US changing this morning, the PCE numbers came in a little bit lighter than expected. And so now the market's pricing in 75 basis points in the US before the end of the year. So ECB probably goes back closer to that 100% likelihood of a cut. But on Monday, when we looked at the numbers here, is a bit of a coin toss. So it'll be interesting to see what comes out of kind of the action this week in US and in China.
Definitely something to look out for. On the commodities front, it appears the market may have reached the bottom, particularly in the energy sector. Any news in that space?
Yeah, so I think that's right. So I think we're starting to see oil and gas pick up off of the bottoms there. So we've seen some of those stocks move already. Natural gas has bounced, and so I think we're probably seeing those bottom. Even some of the agricultural goods like potash and such looks like they may have bottomed too. So typically a signal that maybe we're heading towards that soft landing that a lot of people have been talking about. So that's a good sign, and I think gives us an opportunity to look at maybe buying some of those companies, either the ETF, XEG, or Whitecap, Vermilion, Suncor, something like that. Some of those names look pretty attractive now.
Yeah. Anything else catch your eye this week?
So I'd say the other thing that, because we certainly are getting familiar with AI and ChatGPT, there was that news story that came out this week about OpenAI, which is the owner of ChatGPT, Microsoft obviously part owner as well, potentially talk about moving from a not-for-profit company to a for-profit company. So that'll be worth paying attention to. Obviously, if you want independence, then probably a not-for-profit company makes the most sense. And Altman, who is the founder and CEO, they'd say would get a big interest and big stake if they do convert. That'll be interesting because AI has been moving so quickly, and part of the appeal is the independence of it. So I'd say that'll be something to watch and pay attention to.
Yeah. Any portfolio changes this week?
So some of that around the edges, we're switching out of the pipelines into energy. The other area that I've been reviewing quite closely is looking to get out of the higher quality bonds into corporates. So spent a good chunk of the week looking at either some ETFs or some funds that could be a good opportunity for us to switch because yields have come down now in the corporate or in the government space to, 3.5, where some corporate bonds are still paying 5 or 6%. So I don't think we have a doomsday scenario right now. So I think there's an opportunity to look to switch out of some of the high quality bonds into corporates and pick up some yield without increasing risk. So that's something that I'd be looking to deploy pretty soon here.
Okay, sounds good. Let's go into the charts.
Okay, perfect. Let me know when you can see that.
Yes, I can see it.
Okay, perfect. All right. So this is, we talked about briefly at the top there, just about that change. And so October 17th would be ECB when they come out. So this will be worth looking at when we update it next week on Monday. This will come out. So as you see here, October 23rd is in Canada. Federal Reserve doesn't have a cut until November. So maybe part of why they did 50 as well in the most recent meeting because of the fact that they knew they didn't have a meeting in October. And so right now, when we get this revised, this number down here is going to be 3 something, and 100% chance of a cut in November. So this will be important to continue to track and watch around the world. In one of the dailies this week, I put out that all central banks, with the exception of the Bank of Japan, are cutting. And so I think that is likely to continue. Certainly depending on how things come down and inflation comes down around the world, which we continue to watch and track. So I know, Eva, we looked at this earlier this week just around valuations, and so sometimes it still matters and it's worth paying attention to. But the S&P here up at the top, they're trading at 21 times earnings. And obviously last time we got up into these levels would have been into 2020, into the tech heyday of 97 to 2000, where valuations started to get stretched. And then we went through an extended period here of lower valuations. So that was a sideways S&P market for quite some time. So that'll be worth watching. And EFI, which is Europe, Asia, and the Far East right here, trading at below 14 times earnings. And then certainly emerging markets at just under 12 times earnings. And so with the view that we think US dollar probably weakens as they continue to cut rates, emerging markets tend to do quite well in that backdrop. So there could be an opportunity to tilt a bit more this way, maybe take some profits out of the US and add to either international or emerging markets if you want to increase the risk and return potential. So these are certainly slides that we'd be paying attention to as things evolve. Last one, just from a stock perspective, same applies here. Large cap, small cap in a higher rate environment. Large and small tend to do differently. And when rates are higher, large caps tend to do better. And when rates come down, small mids tend to do better. So if we get that soft landing, then small mids should play catch up here. At least that's what I think, given where we are. So this will be important to think about just from a risk perspective and as well. So as I mentioned here at the outset, PCE inflation came in below expectations. August was 2.2. This is why it's relevant, is this is the Fed's key metric. They like the PCE deflator. So this is what they would look at, and coming in, February 2021, you look at here, so well below where they'd like to be, which gives them continued plenty of room for them to cut rates from these levels. And so that's one thing I have quite a bit of certainty around at this point. And two more quick ones. And so, as I mentioned, I'd show you the chart on China and what happens here. And so, this is the Shanghai CSI 300. So, just to give you a sense, when they did do their cut this week, what the market did, obviously, I think it's probably gotten a bit of ahead of itself because they did stimulate, but it wasn't probably as big as this implies. I think it's been the direction of the change that the market has most liked from the perspective of what they're looking at, what they're planning to do. So big rally off of the bottom for the Chinese market, and something we'd continue to try to watch at this point. Valuations are still cheap relative to some other areas of the world, but a huge rally off the bottom. And then just as for, I know we're going to talk a little bit about what's ahead for next week, but just to give you an idea and scale just around the top line here is what Canada has to report next week. So overall, not too much. Leading indicator on Friday next week from Canada, which will be worth watching a little bit. But in the U.S., there'd be plenty of data to come out. I'd say on Wednesday, mortgage applications always interesting to watch, and then non-farm payrolls on on Friday of next week. So these would be a lot of the things that we'd look out for that could play a role into what happens in the economy. So lots to pay attention to next week from an economic data perspective.
Great charts. Thank you, Ben.
Problem.
Anything else to look out for next week in terms of the markets trading?
So I would say in Canada, certainly Monday's a bank holiday, which I think we spoke about. Markets are still open, but it is a bank holiday, so no transactions can happen on Monday. So if you need anything, it'll have to be on Tuesday or later in the week. Um, from a market perspective, certainly I'll be interested to see how the market digests the cuts from China and what happens over the weekend news-wise. Certainly, some of the cryptos are starting to react to it in a positive light as well. So we'll watch see how that follows through. And yeah, that'd be the primary focus for next week as we get into the end of the quarter. Monday, of course, is the last day of this quarter.
Yeah, great. Thank you, everyone, for listening. Please visit and subscribe to our YouTube page, Hart Investment Group, as well as our blog, Daily Heartbeat. Have a beautiful weekend, and we'll see you next week. Bye.
Bye. Thanks, everybody. Take care.